in hindsight, as you alluded to, I think it's going to look just egregiously resource intensive the way we did AI today in 2026. The fact that we are building these 1 gigawatt, 2 gigawatt data centers to power today's cutting edge models. Like 2 gigawatts is the size of many data centers that's being built today. To put that into perspective, the entire city of San Francisco, where I'm from, consumes about 1 gigawatt of power. So these are single data centers that are consuming twice as much power as the entire city of San Francisco. And it's just, it's insane the resources we're devoting to it. 1 gigawatt is 1 billion watts, and the human brain runs on 20 watts. So I do think that models are going to get way more resource efficient. I also think, as I referenced earlier, that demand for these chips, yeah, exactly. And folks talk about Jevons paradox a lot these days, that like, if you get more efficient, that just drives demand up even more. And I do think that humanity collectively will find a way to soak up basically all the compute we have available to us.
Welcome to Orbit, the HG podcast series, where we talk to tech leaders and investors and hear how they've built and backed some of the most successful technology companies in the world. I'm Jon Wulkan, and today I have the pleasure of speaking to Rob Toews. Rob is a partner at Radical Ventures and an AI columnist at Forbes. His annual prediction piece comes with a public scorecard. He publishes both his calls and the marks, 5 out of 10 in 2025 and 6 in 2024. Rob brings a wealth of experience and perspective, including as an advisor to the Obama White House on autonomous vehicles, and as a leading thinker on physical AI before it was even a field. Welcome, Rob.
Thanks for having me.
Yeah, awesome. Thanks for coming out here. So look, I thought we'd maybe start with a bit of a walkthrough of your background. You've got a really broad range of experience as an operator, as an investor, and also on the policy side of physical AI. So maybe just take us through that.
Yeah, happy to. First of all, thank you so much for having me. I'm really looking forward to the conversation. My quick background, I started my career at Bain & Company based in San Francisco. I did grad school at Harvard. I did the JD MBA there. And it was during grad school that I started getting really passionate about and immersed in the world of AI, and specifically starting with the field of autonomous vehicles. So I spent several years deep in the world of autonomous vehicles. I did a brief stint on the policy side of things. During the Obama administration, I worked in the White House as a staffer focused on autonomous vehicle policy and AI policy, which was a fascinating experience, fascinating set of conversations to be a part of. This was in 2015, so it was the very early days of the government starting to think about AI and autonomous vehicles and so forth.
You found the field before it was really a field even, so really impressive.
It's been incredible kind of watching the field evolve over the years. I then spent a few years at an autonomous vehicle startup called Zoox, where I led the strategy team. Zoox was one of the leading AV startups at the time. The company was eventually acquired by Amazon for a little bit over $1 billion, but that was a great experience. And then for the past 8 years or so, I've been a VC totally focused on AI. I lead Radical Ventures San Francisco office and have led a bunch of our investments over the years across a lot of different sectors and categories in AI.
All right, so Rob, tell us a little bit about Radical.
Yep. Radical Ventures is a VC firm that's totally focused on AI. We are one of the oldest and also one of the largest venture capital firms that's entirely AI focused. The firm has its roots in the early original deep learning research ecosystem. And so as a result of that, we have close ties with many of the leading AI pioneers and luminaries. People like Jeff Hinton and Fei-Fei Li are partners at Radical. Jeff is considered the godfather of modern AI. He was awarded the Nobel Prize a couple years ago for inventing deep learning.
We had him here in Lucid
last
year.
That's right, of course. Yeah. That's amazing. Fei-Fei, another one of the leading AI pioneers. And those relationships and that kind of connectivity to the AI research community has been really valuable for us as we've grown quickly. Today, we have offices in San Francisco, Toronto, New York, and London. We have about 40 folks on the team. We manage about $3 billion in assets, and we invest all the way from company inception all the way through pre-IPOs. We have a couple different funds across different strategies. And within the world of AI, we have a broad aperture. We like to think of the AI technology stack as involving a series of layers. And we invest at each layer of that stack, from the energy infrastructure powering AI to the chips underlying AI, to the model layer across different data modalities, from language models to biology models to chemistry models to video models, et cetera. the software infrastructure, and then of course at the application layer as well, we invest heavily.
And what do you think you learned from the kind of policy side in the Obama administration, and then from the operating side that's kind of made you a better investor?
I think one thing that has been evident to me for a long time, going back to my time in the White House, is that AI is such a powerful technology that it is inevitable that it's going to be front and center as a policy and regulatory question. And the approach that policymakers around the world take toward AI is going to be one of the defining characteristics of the path that it takes. I think that's starting to become more evident to more folks, and it's timely. Literally, just this past week, the White House issued this export order that essentially forced Anthropic to take its latest model off the market. I think that was just the latest development. But I think we're, as dramatic as that moment was, I think we're just at the very earliest innings of this intersection of the AI and policy worlds. And I think anyone who's building in policy, you can't afford to just be a technologist or just be a business person. You have to be thinking about the policy and regulatory environment. And on the on the operating side, I think the time that I spent at Zoox really helped me appreciate firsthand just how fast this technology is moving. And I was there 2017 to 2020, so it was a while ago. But even then, the pace of advancement was just so incredible from month to month, and it has only accelerated since then. So I think you hear a lot about it from the outside, but I think it's worth really internalizing firsthand. Like, the speed at which this technology is advancing is only accelerating, and I think not going to slow down anytime soon.
And take us back maybe to that time. What was kind of the leading AI capability at the time? And obviously light years away from where we are now, but it probably felt very powerful at the time.
Yeah. So when I started at Zoox in 2017, the Transformer paper, Attention is All You Need, was published that year, but people really didn't come to appreciate how powerful it was until at least 2018 when Google published the BERT work. And it wasn't until 2019 when OpenAI released GPT-2 that anyone was even thinking about language models. So you can really think of this as the pre-language model era. And so the big frontier research area for AI at the time was computer vision. And certainly, especially being in the world of autonomous vehicles, the key technology area needed to enable autonomous vehicles is cutting edge computer vision and robotics. And that's where all the leading figures in AI were working at the time, and including folks even today who are leading figures, people like Andrej Karpathy, Andrew Ng, Fei-Fei Li. All these people were working on autonomous vehicles at the time. Karpathy was leading Tesla's autopilot unit. And so there's a lot of really exciting work happening there. And a lot of the research that happened in the field of autonomous vehicles has kind of, I would say, spilled over and positively benefited so many other downstream applications of AI over the years. As one example, autonomous vehicles was really the first commercial area where synthetic data, the concept of synthetic data and simulation, was invented and applied. And today, synthetic data is a critical technology area in basically every important AI field. There were a lot of breakthroughs in robotics as well that have spilled over into more general purpose robotics. So yeah, it was a fascinating time.
And would you have predicted at that time that we'd kind of be at these amazing multi-purpose models sort of before reaching maybe fully autonomous vehicles?
No, definitely not. I think anyone who says in 2017 that they would have predicted how sophisticated AI has gotten by 2026 is being unrealistic. I don't think anyone saw it coming. Even the most fervent, optimistic, bullish advocates of AI. I mean, I just think the progress that we've made in the past less than a decade is it's easy to take for granted now, but it's just astonishing how powerful these models have gotten.
Yeah, it really is amazing. So maybe that's a good segue into your predictions. So maybe take us back. When was the first list of your 10 predictions published? Maybe explain kind of to the audience what the predictions even are, and then why have you kept doing it?
Yeah, totally. So I write a regular column in Forbes about the big picture of artificial intelligence. I've been writing the column since 2019. And one thing that I do in the column is every year in December, at the end of the year, I publish a set of 10 predictions for the coming year about AI across all sorts of different fields, from the technology to the business side of things, the politics, popular perception, et cetera. The first prediction article that I published was at the end of 2020, so predictions for 2021. And then, as you noted, in addition to publishing that article every December, the following December, I always publish a retrospective that basically grades my 10 predictions and says, like, which ones did I get right, which ones did I get wrong. I try to be a somewhat hard grader.
Which I think that's great, by the way, to have the intellectual honesty to put out the predictions publicly and then actually measure yourself at the end of the year. It's just such a great process, and I'm sure your readers love that transparency.
Totally, yeah. I think it's so easy to publish predictions and then kind of forget about them and never follow up on them. And I honestly, even just for me personally, it's very intellectually interesting and satisfying to go back and see, like, okay, this is how I was thinking about the world. Like, what did I get right? What did I get wrong? Obviously, no one can predict the future with certainty, but I think just the exercise of making predictions and then going back and reflecting on them is a great learning experience.
Is there a theme that you found easier to predict versus harder? For example, the policy side or the pace of change. I feel like you've been pretty good at predicting, actually, the rapid pace of change the past few years.
That's a good question. Yeah, I think probably policy and public perception of AI is easier to predict because it follows a bit more predictable of a cadence. I think oftentimes the capabilities and the underlying technology just has these jumps that people wouldn't have expected or seen coming ahead of time. And so I think that, that area is a little bit more hit or miss.
And so as you thought about the predictions for this year, what were some of the things on your mind when you were writing them, I guess, in December 2025?
Yeah.
And maybe kind of talk about how the year has started to play out.
Yeah. Great question. I think a few of the kind of big overarching themes that I knew were going to play a central role in the world of AI in 2026 included the role of China in the AI ecosystem and how the US-China power dynamic would play out and some of the implications of that for the trajectory of the technology. I think certainly the massive CapEx build out and this unprecedented investment in building out AI data centers, as fast as humanly possible with the hyperscalers investing hundreds of billions of dollars per year. That's obviously a defining trend and I knew would be really important going into this year. I also think it was on my mind and has become increasingly clear this year that beyond language models and kind of digital AI, the deployment of AI in the physical world and kind of hard tech and deep tech is becoming increasingly relevant, from things like chips to robotics to even things like brain-computer interfaces. So I think that's another theme that I was certainly pondering then.
You touched on the role of kind of China and the US in the build out of this ecosystem. Maybe that's a good segue into what you see as the end state, at least for the frontier models and for the kind of model ecosystem at large. I'd love your views on that.
Yeah, I mean, I think a few things. I think it's very, very hard to stay on the frontier of AI research. It's just insanely capital intensive, and there's such a small pool of talent that has the requisite know-how and experience to continue advancing the frontier. And so I think you've seen several companies that had aspirations to be at the frontier kind of fall away, including companies with tremendous resources. One example I would give is Meta, which kind of shifted to an open source strategy, and has Zuckerberg has spent all this capital on trying to hire the best people, but they clearly have not been able to keep up. Even XAI, I would say, I think they haven't publicly acknowledged it yet. But my view is that they, for all their resources and all the capital that Elon Musk has put behind it, I think that they have not been able to keep up with the frontier. And one signal of that is that, as I'm sure folks saw, XAI recently agreed to rent basically all of its GPU capacity to Anthropic, and there's just so little GPU capacity to go around, and the frontier labs just cannot get enough of it. And so if you are serious about continuing to train frontier models, you can't afford to give away so much compute to another competitor. So That's all to say, I think basically today there are 3 true frontier labs in the West: OpenAI, Anthropic, and Google DeepMind. And it's hard for me to imagine, I mean, never say never, but it kind of feels to me like those 3, that might be a pretty enduring kind of top tier going forward. It's just so hard to catch up.
And then among those 3, how do you think about the end state? Because again, there was news in the past week, OpenAI may be thinking about cutting its prices, obviously fighting to kind of maintain share with Anthropic. So even that sort of market dynamic hasn't fully played out. And then of course the models are talking about moving more into the application layer, more into workflow, basically to kind of make themselves that much stickier and more enduring. How do you think about that sort of battle playing out while also prioritizing being at the frontier?
Yeah, it's the price dynamic is really interesting. I mean, I think a helpful analogy here is in the 2010s, the ride-hailing market, which was back then the hottest market, and Uber and Lyft were in this kind of existential battle and were raising incredible amounts of money, and similarly had this race dynamic to go public, went public at basically the same time. But I'm sure folks at least living in the Bay Area will remember, like, for a long time rides were very cheap on Uber and Lyft because they were super subsidized, because these companies were in this massive market share land grab, and so they were willing to take losses to win riders. And then especially after they went public and there was kind of increasing scrutiny on their financials and more pressure to get profitable, prices went up over time. And I would expect a similar dynamic is going to play out with the language model companies. So yeah, the news that OpenAI is thinking about slashing prices, like, it's not totally surprising in the lead up to both of the companies' IPOs, especially given that OpenAI is grappling with slowing growth, frankly, and like declining market share. And last year they were talking triumphantly about getting to 1 billion monthly active users like any week now, and they still haven't gotten there, and they haven't announced anything. So I do think OpenAI is desperate right now for increased growth, but I think it's not sustainable. Like, I think especially once these companies get public, I think they will have to rationalize their kind of price structure and cost base. And so I think that means the price, at least for the most frontier models, is going to go up significantly across all three of them. I think another related dynamic that's people maybe don't pay enough attention to when you think about the dynamics across all three of these players is there's one thing that makes Google very different from Anthropic and OpenAI, which is that it has this incredible money printing machine and like essentially limitless war chest of capital to fund its AI aspirations because its core business is so insanely profitable. OpenAI and Anthropic are burning a ton of money every month, and so they are not default alive. Like, they have to depend on the graciousness of outside investors to continue giving them money to continue growing. Now, I don't worry about their ability to fundraise because investors are very excited to give them more and more money, and they'll both IPO and raise a ton of money, but they're nowhere near profitability today. And so I think over time that is going to be a huge advantage for Google relative to OpenAI and Anthropic, who are going to feel a lot more pressure.
And then maybe bring China into that mix.
Yeah, so I think the most interesting dynamic with China to this point is that, this is something that would be totally counterintuitive 3 years ago if someone told you this, that all the best open source AI models in the world are coming out of China. Meta once had that crown and they've kind of fallen off. And so, whether it's DeepSeek or Alibaba with its Qwen models, or the Kimi models, all of the top models, if you think about like the top 5 or 8 open source models, they all come out of China. That creates really interesting dynamics for US and Western companies many of whom want to build on top of open source models. And, if you're building on top of an open model, naturally you want to use the most advanced model. But there are these really interesting dynamics and tensions around, like, if you're a US company, are your customers okay with your product being built on top of a Chinese model? What risks does that expose you to? Is it okay? What are the differences between if you host the weights yourself versus if the weights are actually hosted by DeepSeek or Alibaba? And so I think that's something that a lot of companies in the US and frankly a lot of our portfolio companies are grappling with. And I think the answer varies depending on the market and depending on the end customers. And then I think there's one more interesting dynamic here, which is, as I mentioned, the open source frontier today is totally defined by China, but there is kind of like a nascent movement that there's already some early signals around that China's labs themselves may start to close up. And we've seen this with both DeepSeek and Alibaba. The latest generations of their cutting edge models, they did not open source. They put behind a proprietary API. They'll train a series of models. They'll open source like the 7B parameter model and maybe the 12B parameter model, but like the really big one that's cutting edge, they no longer are making openly available. So I think that is another interesting question of like, are the labs both in China and in the US starting to close up more broadly? could the future of open source frontier AI be in jeopardy? I think it'll be a really interesting dynamic to watch play out.
Yeah, definitely. Maybe just moving on to the CapEx point that you were raising. I thought this was kind of a contrarian point that you had, but talk about your views on how merited this sort of CapEx super cycle is, how sustainable it is. Like you said, it's kind of being subsidized by essentially eager VC money and private capital right now. How do you see that playing out?
Yep. My view is that over the long term, demand for intelligence, including artificial intelligence, will basically be infinite. And so we will find good use for basically any GPU and AI hardware that we develop and build out. Now that's in the long term. In the short term, there certainly can be ups and downs, and it would not at all surprise me if there's a market pullback and we see, many of these data center projects be abandoned, or, financing kind of gets pulled and so forth. I think that's those sort of near-term market gyrations are inevitable when there's this big of a technology boom and an investment cycle. The specific prediction that I made was that this question of depreciation schedules for chips, which seems like kind of an esoteric accounting topic, will actually become really important this year. And just maybe to provide some quick background, generally when companies build out data centers, the computing infrastructure, including the GPUs and the CPUs, are depreciated over a 5 or 6 year time horizon, which means that each year you are only recognizing about 20% of the overall cost of the GPUs as an expense, and you sort of depreciate it over 5 years. And big clouds today, whether it's like Amazon, Microsoft, Google, or especially the neo clouds like CoreWeave, Nebius, et cetera, are continuing to use these 5 or 6 year time horizons, which makes your profitability look much better as a company than if you have shorter depreciation schedules. The big thing that's changed is that new generations of cutting edge AI chips are now coming out every 12 to 18 months. If you look at the recent several years at NVIDIA's release schedule, like the H100 came out, and that was the leading edge chip that everyone wanted to get their hands on, until the H200 came out about a year later, and then there was so much more demand for the H200. The H100 was less in demand, but then soon thereafter, in less than a year, NVIDIA came out with its Blackwell series of chips, which was again a major step up. And there's the B200s and then the B300s. Currently, the B300s are the cutting edge chip, but the Vera Rubins are coming out sometime in early 2027. And so this like very fast pace of new chip releases, I think, calls into real question, like, is it still justifiable for these companies to use 5+ a year depreciation schedules? Should they instead be using like 2 year depreciation schedules because they're new chips that come out so quickly and therefore may render the previous chips obsolete? And if that is the case, then the profitability profiles of these companies suddenly look way different, way less attractive. And this includes a couple high profile publicly traded companies like CoreWeave, whose financials are heavily scrutinized. And so like the prediction was that topic will become a lot more front and center this year.
Yeah. Well, now you're talking our book when we're talking depreciation schedules and getting into the nitty gritty of accounting. It's a good private equity book. And also, I think you'd made a comment that this build out will feel very inefficient in hindsight, as in the models themselves will get that much more efficient, and so the need for all of this compute, while it may get consumed eventually by sort of infinite demand for the end product, the actual kind of intelligence that is powering today is going to look very inefficient in the future.
Yes, definitely. This is something that I believe very strongly, that I think maybe is not yet a consensus view yet, which is, in hindsight, as you alluded to, I think it's going to look just egregiously resource intensive the way we did AI today in 2026. The fact that we are building these 1 gigawatt, 2 gigawatt data centers to power today's cutting edge models. Like 2 gigawatts is the size of many data centers that's being built today. To put that into perspective, the entire city of San Francisco, where I'm from, consumes about 1 gigawatt of power. So these are single data centers that are consuming twice as much power as the entire city of San Francisco. And it's just, it's insane the resources we're devoting to it. And like the kind of counterfactual existence proof that I like to point to is, the whole goal of artificial intelligence is to build intelligence that is as powerful as human intelligence. The human brain runs on 20 watts,
right?
Which 1 gigawatt is 1 million. No, 1 gigawatt is 1 billion watts. And the human brain runs on 20 watts. So I do think that models are going to get way more resource efficient. I don't think that there will be one silver bullet. I think it's going to be a cascade of innovations from the hardware layer and fundamentally better chips, maybe totally different kinds of chips. Some folks are working on analog chips instead of digital chips. Certainly at the algorithm layer, I think models are going to get, algorithms and model architectures are going to get a lot more efficient. And then at the data layer as well. And I do expect this will play out relatively quickly. I do, at the same time, although I do think that like drastic improvement in efficiency is inevitable, I also think, as I referenced earlier, that demand for these chips, yeah, exactly. And folks talk about Jevons paradox a lot these days, that like, if you get more efficient, that just drives demand up even more. And I do think that humanity collectively will find a way to soak up basically all the compute we have available to us.
Yeah, no, I completely agree. I love that comparison too with the human brain. You have a separate prediction about kind of the fusion of biology and one of the model companies and how that comes together. Although I don't think we quite have time for it, so I'm just going to move us on. Our audience, as you know, we tend to invest in a lot of vertical SaaS and services businesses. Of course, it's a very live topic for us, which is why we're here in Lucerne. Maybe talk to me about what you would recommend our CEOs or kind of our investment team should be focused on as they think about the durability of those vertical software companies and the transformation into vertical AI companies.
Yeah, it's a great question. I think there's a lot of concern and apprehension today around the frontier labs and their blast radius. And as you mentioned earlier, as they move up the stack to the application layer, is Anthropic coming for my business basically, or, is OpenAI or Google, destined to subsume the industry that I operate in? And my view on that is, yes, the frontier labs are formidable organizations for sure, executing at breakneck speed with cutting edge technology. But to put it very simply, I don't think one or two or three companies can ever win every single market and excel in every single market. It's just not possible, I think, organizationally. And so I think the big labs will focus on the very biggest markets. Coding was the first big one. I think maybe some big horizontal markets like customer support or legal, you can envision Anthropic or OpenAI rolling out products for. But I think the vast majority of SaaS companies today, vertical SaaS companies, operate in markets that are attractive, that you can build a great business in, but that will never attract kind of the full attention of a frontier lab. And I think that last mile in terms of having real context around the customer's needs, historical data, the understanding customers' workflows, that is all very hard-won insights that's generally not available publicly and not available on the internet to train on. And I think that represents a real durable source of advantage for a lot of software companies. So I do think the whole concept of the SaaS apocalypse and the death of software is oversold. I think it was and probably still is a great buying opportunity when Salesforce and Snowflake and ServiceNow cratered so much. I think those stocks have been oversold. I do think what's really important to your question is even if you're not a new company that's AI native from the beginning, I think that the DNA of a company and the values of a company will define which companies thrive and which don't moving forward. And so I think what is absolutely essential is to try to make your organization as immersed in AI and as AI native as possible. And tactically, I think that means really encouraging a spirit of experimentation, giving all your employees access to all the leading AI tools, encouraging folks from a bottoms-up perspective to kind of experiment, tinker, build new tools, see how you can improve processes. It's just incredible how powerful these models are today with a pretty light amount of harnessing and scaffolding. Without needing any kind of technical coding knowledge, you can build agents that can automate pretty complex workflows and tasks today. And so I think making sure your workforce is AI fluent is important. From a hiring and talent perspective, hiring people for slope rather than y-intercept, hiring young, hungry people that are experienced using the tools and can kind of be standard bearers for adoption of the technology internally. I think all those things are really important because there will be, in every industry, there will be new entrants and upstarts that are AI native. And if you aren't using this technology in everything you do, then I do think you're structurally in a bad position going forward.
Well, we completely agree, and it's great to hear because it's a lot of what we're focused on as well. And you obviously have investments that you made sort of pre the last 2 or 3 years. How do you think about where you're trying to double down? Is it kind of the traits that you just laid out, and anything else there?
Yeah, I think one interesting area where we have found ourselves investing more and more, and we certainly continue to invest a lot in software across the application and infrastructure layers, but and maybe this is more relevant this certainly is more relevant on the early stage technology side of things, but it may be interesting for your audience that deep tech really is experiencing a renaissance in this era. I think largely driven by the power of AI to turbocharge a lot of workflows and research. But from chips to space to robotics, areas like lithography, certainly bio, there's just been this rush and tailwind of incredible innovation and rapid change. And so we are finding ourselves diligencing and investing in a lot of hardware and deep tech companies that we think I think a lot of the long established leaders in deeply technical fields, including, as heretical as this may sound, like NVIDIA in chips or ASML in lithography, or even SpaceX and launch in space. Like, I think all of those markets are going to be up for grabs in the coming years, and so that's been a really interesting area for us to dive into more.
It's a bold one for your 2030 predictions. So.
Yeah, although at the same time, I will say, like, never bet against Elon is a very wise mantra. So I would stop short of calling for SpaceX's demise.
Just before we wrap, who do you read to stay on top of everything that's going on in this kind of moment of rapid change? Who do you listen to?
I'm a huge fan of Dwarkesh Patel's podcast, and he is an AI podcaster who just goes incredibly deep in research before he interviews every subject, and he's managed to get basically all the top AI leaders on his podcast, from Ilya Sutskever, the OpenAI co-founder, to people like Satya and Jeff Dean and so forth, and he goes really deep. So I think from like a substantive point of view in terms of where the field of AI is going, Dwarkesh's podcast is great to listen to. Andrew Ng publishes a weekly blog. I think it's called The Batch, which I find really informative and substantive. And as your listeners may know, Andrew has been at the forefront of the deep learning revolution really since its inception in 2012, but continues to be one of the leaders and public figures in the space. And I find he writes in a really digestible and intelligible way.
Awesome, and we'll continue to read Rob Toews' column. So, well, great. That's been really, really interesting, and I've really appreciated the conversation. Thanks for coming on.
Thanks so much for having me.
If you'd like to find out more about HG and our work building enduring enterprises, subscribe to our newsletter at hgcapital.com/newsletters.